Hey Bob, how you doing?
I'm doing great, Judson.
Great. I know we had you on a few weeks ago, and you and I sat down for about an hour and a half or something like that, and talked a little bit about working short sales with realtors. And if folks want to watch that webinar, we recorded the whole thing, so they can go back to the reiminute.com/agent magnet. But today we want to sit down with you and talk to you a little bit more about what's going on in the short sale market, because I know you're a big player in that. So we wanted to sort of pick your brain, if that's okay with you.
Absolutely, pick away.
Okay. Well, let me ask this. As far as like the short sale numbers, how are they sort of looking right now? And what are we talking about as far as the opportunities in the market in the short sale side of things?
Well, the numbers, first of all, are still extremely strong and projected to be even stronger over the next 12 months.
Okay.
The federal projection is that there will be somewhere around 4 million plus foreclosures in the next 12 months. Some statistics that are really interesting is that if you go back 2 years ago, there were 8 foreclosures to every short sale.
Okay.
And that number has adjusted itself. Last year it was like 3.8. It's projected to be 1 short sale to 1 foreclosure in 2010.
Okay, that's a huge reversal then from the foreclosure heavy market to the short sale market today. It's pretty much even.
The banks are clearly recognizing that they need help getting rid of these properties, that there are better ways than foreclosing, and so you're really seeing a significant change now. We submitted a deal a month ago out in California, and yesterday we got their counter back that basically says, okay, we're not going to pay this and this and this, and here's the number. And frankly, for that to happen in a month is incredible.
Yeah.
And
Right.
that tells you what's going on in the market. We got one that came in that we started about 6 or 8 weeks ago, that came in from Bank of America, which is probably the hardest to deal with.
Okay.
And that approval came in. This is an empty lot that we got, that the guy paid 2 years ago, paid $270,000 for, that we got an approval for $8,000.
Wow.
Wow.
So, things are starting to move. They are
Right.
starting to get rid of this stuff and move along. And so, number one, there's huge volume.
Okay.
Number two, the banks are finally starting to loosen up and start moving and getting these things closed. We have another approval right on the edge in Boston. We've got quite a few now that are finally starting to break loose.
Cool. That's awesome.
Yeah, that's good news. Now,
Yeah.
Bob, what is the biggest challenge that short sale investors face?
Boy, probably the biggest single one. I mean, there's all sorts of things. Finding a buyer is always a huge challenge for
That's
people.
right.
Okay, probably evaluating the deal more than anything else is the biggest single problem investors face, because unless you really know how to evaluate it and understand what's going on with the mortgage company and how they make decisions, you can't make a good business decision.
Right.
Okay, and people think, I constantly get the question of what's the average percent you can get off of the mortgages on a house.
All right.
Well, it has nothing to do with the value of the mortgage on the house. That has zero to do with it. It all has to do with the estimated value as a result of the BPO or broker's price opinion. That's what's driving the whole deal from the mortgage company's perspective. They go out and they buy reports from various vendors, and they'll see, based on drive-by brokers' price opinions, what they think a property is worth. Okay.
Okay.
What we want to do is get them to go through the house, get a walk-through broker's price opinion, so they can see the issues, see the challenges, see the problems with the house. Drive-bys are rarely accurate.
Yeah. No kidding.
So, investors' problem is, you go out to the house, how do you evaluate, how do you guesstimate where that BPO should come in, and how do you guesstimate what you can sell it for?
Okay.
And that's the challenge, and we try to help people through that, so that we give them a very measured way to look at the house to say, okay, This one looks like it'll get enough spread, or no, there's no way it will.
Right.
And in one very simple way to determine on a house whether to even do anything with it is if the comps come in, comparables, and they're all plus or minus 5% from that house,
Right.
don't bother.
Okay.
Right.
Because basically that means there's a market out there for the house at that price. So
Yeah,
Monthly
everything's
discount.
all and if you can get them where there's a spread in those numbers, now you got something that you can work with, and you've got an opportunity to get the numbers down where there are numbers that you can work on.
okay. So I was just looking at a house today. Happened to be near here that I was looking at. That was a pre-foreclosure, and I'll just run these numbers and tell me if this makes sense. There was. Unfortunately, there's quite a few comps in the area that are foreclosed properties. But some of these properties, they're running in there's a couple of them in the 140, 155 range. But then I also had a few that were between 85 and 95. So that's going to give me a spread that I can take to them and say, hey, here's the shift in the market. Is that what you're saying?
Yeah, and especially if there are condition issues about the 140 and 145s, that they're in perfect shape and your house needs some work.
Right.
The other thing is, when did the 140 and 145s happen? Were they bank owned? Because here's one of the things that I really want people to emphasize, and that is that the BPO should be an assessment of the value of that property as a bank owned property.
Oh, okay. Not as a retail sale.
It's not. John and Julie don't own the house, and they're not selling it by themselves anymore.
Right.
It says in MLS, it says bank owned, and the minute it says bank owned, every single agent I've ever talked to will accept that it's worth 15 to 20% less.
Right.
Right.
That makes
Okay?
sense. Okay.
So the mortgage company needs to know what's it worth to them when they own it, not what's it worth as a retail sale, because it's not. The furniture's gone. Every wart and every problem shows. The lawn's not mowed. The house has been empty for a while. All the issues that go along with that kind of thing.
Gotcha. Okay.
Right.
That
So-
makes sense.
Now, Bob, talking about how long it takes to get them approved, about how long are the banks taking right now?
That's kind of like Allison, like asking how long does it take to get paint to dry. It depends. If you blow a heater on it, it might dry real quickly.
Yeah,
Yeah.
it's true.
There is not an answer to that. I'd love to give you one. There's a lot of pressure out of the new HAFA program out of the government to say, give us answers right away.
Right.
Yeah.
Well, that program has its highs and its lows, okay? One of the lows to it, and why it really won't work well for investors, is that the bank is going to make a decision based on a drive-by BPO, because that's all they have in the file. The home owner has not let them go through the house,
Right.
right?
Right.
So they don't know the rest of the condition. They're going strictly by that. So it's just, they're going to get a quick answer within 10 days, but it's going to be based on broker's price opinion that's too high.
Oh, okay.
So great concept. Reality is, it really isn't a bearing. If it's a retail buyer trying to buy it through a real estate agent and they're willing to pay a fairly heavy price, the deal can probably get done.
Right.
But reality is that program really is not fitting.
Okay.
Gotcha.
Whoops, looks like our 10 minutes of fame's up.
So if you want to see the rest of the video and you can't watch on Google and all those other places, make sure you go to the reiminute.com and watch the video there. You get to see more and more of our pretty smiley faces.
That's right. Don't miss out.